forward to next week. Joining me now, Stifel Chief Washington Policy Strategist Brian Gardner and B. Riley Wealth Management's Chief Market Strategist Art Hogan. Art, I was looking at your notes. I think you had a year-end target for the S&P of 6,000. And here we are a month and a half early at 6,000. Are you already changing your outlook, or do you think it kind of middles around here, back and forth?
Yeah, I think it's probably too late to be making major changes. We have to come out with our 2025 targets pretty soon. I would tell you, I think you and I talked at the beginning of the year and well into July, and you thought I was being a little aggressive with that target. So felt pretty brave for most of the year, but certainly glad to see we're able to sort of ride the wave of better earnings growth, better economic growth, and certainly a Fed that has finally pivoted here to move the S&P 500 higher for double-digit gains for 2 years in a row.
Yeah, let's not forget the Fed, which cut rates yesterday by 0.25%. And, normally that would be huge news, but it's such sort of taken not the back seat, but maybe the sidecar at the moment, Brian, because the election and Donald Trump's re-election has really vitalized this market, which was already running pretty hot, right?
Yeah, I'm a little surprised at the strength of the rally because I thought a lot of it was baked in. It was not going to be the surprise that 2016 was. So I was expecting a rally. I just wasn't expecting this much of a rally. So it has been a little surprising. But
when you're talking to clients, because your job is to help them game what's going to happen in any given administration, you did expect equities would get a bump, but you also called that treasuries might melt down with their yields going up, and that is exactly what has played out, has it not? And what's the message behind that?
I think it's a mixed message. I think there's a little bit of a renewed growth story, a higher growth story. There are concerns on the fiscal situation that higher deficits that could come out of Trump policies could send the bond market lower. And then the trade situation, which is just uncertainty and probably weighing on the market. So it's a mix of a couple of factors.
Yeah, well, the belief would be that tariffs that Donald Trump has talked about might be inflationary. Yep. But that said, Art, you've been trying to game this as well, the sectors that might have a longer vapor trail of strength here beyond just this first week, because Donald Trump doesn't get into the Oval Office until January. What are you saying people need to position or move on the chessboard at the moment?
Yeah, I think the three, two that are very much consensus, but the small caps, the Russell 2000, which is still below its all-time high, which it put in back in 2021. And the gap between the small caps and the large caps hasn't been this wide on a valuation basis going back to 1999, 2000. So I think that domestically focused small caps really have a chance, especially in an environment where interest rates are likely going to continue to come down. I think the second sector that really gets some tailwinds here and has been propelled pretty nicely this week, but will continue, with the financials. I think the three reasons there, obviously, the potential for a lighter regulatory touch comes into play, a steeper yield curve, certainly, but stimulated economic activity is going to pick up loan demand for the money center banks, both from institutions and from consumers. So our two plays there would certainly be JP Morgan and Visa. And then the third, with the more controversial call, and you talked about at the beginning of the show, is energy. I think the fear is that having a drill baby drill mentality and cutting some restrictions on the energy complex is going to all of a sudden produce a massive amount of oil product in the United States. And we're basically at capacity. It takes years to bring new capacity on. So I think the thought of us oversupplying, especially with energy companies that have grown a great deal of discipline in the here and now, is probably not an intuitive thought process. I think what actually happens is we continue to be the largest producer in the world, but we don't grow the way we've grown over the last 3 years. We have moderate growth, and China demand eventually comes back for the hydrocarbons where it hasn't been for 3 years.
And let's just let our viewers know that we have the CEO coming up of the company that provides 30% of this entire nation with its natural gas, Williams. And so we're going to ask him about what he anticipates and how do you ramp up that production. It doesn't just happen overnight. Brian, one thing for sure, we have seen today that despite the post-election exuberance, we've started to see some consumer names sending up a few warning flares in their earnings conference calls, and also maybe not hitting certain targets that make investors suspicious or concerned that, for example, Airbnb, we've got Monster Beverage, Pinterest, Bath & Body Works, Sweetgreen, Capri Holdings. A lot of them were coming out and saying, we're starting to see the consumer wobble just a bit. What does that tell you?
Well, I mean, part of that is not the consumer story. It's the trade story and the possible tariff story. On the consumer has hung in there stronger than anybody expected. I mean, if we go back a year or two ago, we were waiting for the consumer to turn over, and the consumer has always hung in there. Maybe we're finally at that point in the cycle where consumers are going to start to show a little weakness, and that's certainly going to get the Fed's attention going forward.
Yeah, I would think so. What sector do you feel most confident about investing in or telling your clients to invest in right now, looking ahead to the next 4 years?
I think Art touched on it, which is financials. And I'll just hone in on banks and regional banks.
Yeah, regionals, that's interesting.
Lighter regulatory touch, better yield curve, better M&A environment. So that may not be that part of the story may not be as relevant for the regionals, who may still face a little pressure on getting their deals approved. But certainly for mid-sized banks and community banks, they're going to find an easier path for consolidation.
Yeah, although less regulation, that really gives regionals a bump.
Absolutely. And that's something that can happen quickly when there are new heads of agencies in place. So we could see that happen very quickly in 2025.
Brian, Art, thank you both very much. Art, 44,000. You and I go way back, I think, when the Dow was at, I don't know, 6,000. Can you believe this?
Hey, don't tell anybody that. That's right. We're not that old.
We're not that old. We're young at heart. Great to have you both. Thank you so much.
Thanks, Liz.